Yeah, so now I hope that everybody is able to listen to me. And on that note, we'll start with our presentation. So this is the agenda for our today's session. We'll be discussing about business impact on dealers registered under composition scheme, and those who have joined us earlier, they are aware that we have covered overview of GST, detailed overview of GST, why GST is coming, and what are the taxes that GST is going to subsume. So these all topics we have already covered. Then we did a webinar on enrollment process because we were getting requests from various dealers register under VAT law that they are facing certain challenges while doing their enrollment. And on that note, we did a session on enrollment process, and post that we did a session on registration and return filing that are required under GST regime. So, and today we are here presenting a session on composition scheme. So I'm sure that most of us are aware about composition scheme because this scheme is currently prevailing in VAT laws, and the same scheme, the benefit has been extended to GST regime also. So this is the high level agenda for today's session. Again, we'll start with overview of GST. This we have been doing in each of our sessions because we understand that some of the attendees are joining us for the first time. So we cannot directly jump into composition scheme, but we'll cover it very quickly. We will not take much of time on basic overview of GST. In case if you have missed our session on GST, the basic overview of GST, you can come to our Facebook page because we have been putting our videos on our Facebook page as well as on our YouTube channel. So you can access to those videos. And once we cover overview of GST, we'll directly jump over on composition scheme. We'll first have a high level overview of composition scheme, then we'll look into what are the conditions for eligibility. There are certain modification that has come in revised model GST law. So what are those modification? And then we'll look from the perspective of small and medium enterprises and startups, that what are the benefits in the composition scheme, and what are the drawbacks or what are the challenges if businesses get themselves registered as a composition dealer. And then we'll look into transitional provision, in the sense like if I'm a composition dealer in current regime, and if I opt to be a normal taxpayer, what are the transition provision, and the vice versa scenario wherein I'm a normal taxpayer presently, but I'm choosing to go with composition scheme under GST region. So, what are the implication on transition? How am I supposed to get input tax credit? So, we'll discuss all those provisions, and finally, we'll open ourselves for question and answer round. So, just to highlight that last time we had an extensive question and answer round, which went for like 30 to 40 minutes. So we expect similar participation today as well from all other attendees. So please be proactive. Please put as many queries as possible. Please don't give much thought. So GST is a new concept. We all are here to learn. So the more you participate, I'll make sure that we have a nice session. So quick overview about goods and service tax. The slide is self-explanatory, but I'll take 2 minutes. So GST is a comprehensive tax levy on manufacture, sale, and consumption of goods and services at national level. So those who are joining us for the first time, they must be wondering that yes, GST is comprehensive, but why comprehensive? So well, it is comprehensive because today we have multiple taxes. When I talk of today, we have a list of state level levies, then we have a list of central levies. When we talk about state level levies, we have value added tax, we have entertainment tax, we have entry tax. Certain cases we have municipal taxes. Likewise, when we talk about central levies, we have services tax, then excise duty, then certain portion of customs duty, like special duties and countervailing duties, and many others. So GST is expected to subsume all these central and state level taxes, indirect taxes, um, at national level. So that is the reason it is a comprehensive tax levy. Now today we have excise duty on manufacture, on sale we have VAT and CST, and similarly for on consumption of services we have services tax. But GST is going to subsume and replace all these levies. So that is the reason it is a comprehensive, and that too at a national level. So we don't have state specific compliances that needs to be done under GST region. Next, we have we have a concept of value addition at each stage that we are witnessing under value added tax. So same concept has been extended to GST as well. So GST is a tax on goods and services with value addition at each stage. What that means is a supplier of good has to pay tax only on the amount of value addition that has been done. Any taxes that he has paid at the time of purchase, he'll get credit of such taxes at the time of making payment of tax liability on supplies. So that is the concept of value addition at each stage. So that also removes cascading effect of taxes, because there are scenarios wherein today when a good is manufactured, manufacturing unit is required to pay excise duty, and when they sell such goods they are required to pay either CST or VAT on an amount which includes excise duty. So that is how cascading is taking place presently. So GST is expected to address such drawbacks. So GST will subsume many state level and central level indirect taxes. Definitely, I have already named few of them, and it is also expected to address all the drawbacks. So one drawback is cascading of taxes. Another drawback is multiple compliances. Today we are into dynamic businesses. Today businesses are manufacturing at the same time they are dealing in goods, and at the same time they are also providing services. So in such scenarios they are required to comply to three different laws. So they are required to comply with excise duty, they are required to pay taxes under excise duty, file return under excise duty. Similarly, they are required to comply with CST or VAT laws, and then services tax. So that definitely shoots up the compliance cost for businesses. And once it is a single regime, so there's no requirement of multiple returns and multiple tax payment. All will fall under GST. So that is how GST is also expected to address all these issues of current tax regime. So that's the high level overview of GST. I hope much can be added, and we have already done a session. So in case if you want to deep dive into GST concepts, you can definitely come anytime on our Facebook channel and view our previous video. And on that note, we'll move forward. So we'll directly jump onto composition scheme. Now, what is a composition scheme? Why it is required? Why cannot why government does not promote a single or the normal scheme? So composition scheme is a mechanism by which tax administrative authorities enable small taxpayers to be tax compliant. Now, this is very important. Why? Because we in if we talk about Indian market, we have diverse industries, and a huge amount of GDP is contributed by small and medium enterprises. And so all these small enterprises, they may not have the expertise, and they may not have the requisite resources to be tax compliant, in the sense they are required to file all returns. So last time we discussed that in GST a normal taxpayer has to file three returns on monthly basis. Now, small and medium businesses, they are mostly driven by single individuals, or a small team of manufacturers. So they may not have this expertise. They may not know like what all returns are required every month. If they are required to file three returns, then they at the same time they also have to focus on their businesses. So that is where they face challenges. So to address such kind of scenarios wherein small businesses are not controlled with rigidity, rather than they are given flexibility to file return on quarterly basis. So with such intention, composition scheme has been introduced. So the threshold limit for composition scheme is 50 lakh. What that means is, if your business turnover is below 50 lakh, only then you are eligible to be a composition dealer. If your turnover exceeds any time beyond 50 lakh, then you'll have to pay taxes under normal scheme, and you are required to file all the returns as a normal taxpayer, in the sense that you are required to file three returns on monthly basis. So this makes it very clear that only small businesses whose turnover is below 50 lakh are eligible for composition scheme. And another benefit under this scheme is a composition dealer is required to pay tax liability at a very nominal rate. What this rate would be has not been notified yet, but we have like government has provided that such rate should not be less than 1%, and it is expected to be in a range of 1% to 2.5%, which will be notified at a later date. So let's suppose if GST rate is 18%, a composition dealer is required to pay only tax at the rate 2% only. So that is another benefit under composition scheme. Now, detailed records are not required. So, as a normal taxpayer, you are required to maintain detailed records for all the supplies that you have done, then all the purchases that you have done, all the input credit that you have availed, all the taxes that you have paid, all the tax liability which is payable. So, all these detailed records are not required to be maintained for a composition dealer. And That is also because, as a normal taxpayer, you are required to pay file three returns, but under composition scheme, you are required to file only one return. So, what all information is required to be contained in that return is only required to be maintained as records. So, that is the reason why minimalistic records are required. And again, as I mentioned, that a composition dealer is required to file quarterly return, and that too in a very simplistic manner. Or most of the information. So when we talk about normal taxpayer, they have to file three returns, and GSTR2, GSTR3 that we discussed last time are the more of auto-populated information from counterparty transaction. But here in this case, all the control for the information contained in return is kept with composition dealer. Not No data is flowing from counterparty return. So that is the reason and also it has been termed as bill of supply. It is not termed as an invoice, because composition dealer cannot issue a taxable invoice. That will be looking in our next slide. So the return itself will contain information with respect to all the supplies, taxable, non-taxable, exempt, export. And on a percentage basis of turnover, the composition dealer is required to pay taxes. Now, some of the drawback of composition scheme is interstate supply not eligible. What that means is, if I'm a dealer registered in the state of Rajasthan, I can do business only within the boundaries of Rajasthan. If I'm making supplies outside Rajasthan, that I'm not eligible for composition scheme. So that is where government has tried to control uh, on the market borders that are available to a composition dealer. So in case if you are a small business, your turnover may be less than 50 lakh. But in case if you are the making interstate supplies, you have to register yourself as a normal taxpayer. So that is one drawback. And next is, this scheme has not been extended to service provider. So if you are the service provider, irrespective of your turnover limit, you have to register as a normal taxpayer. So initially, when model GST law was introduced, this scheme was actually introduced rolled out to service provider. But then eventually, in GST council meetings, it was decided to not extend this benefit to service provider. And in revised model GST law, we saw provision coming within the scheme has not been extended on service providers. So so also, in case if you are providing services and also dealing in goods, in those cases as well, this scheme is not applicable for you. So you have to register as a normal taxpayer. Now, talking about the conditions of eligibility, so it has a voluntary registration mandatory. Now, what that means is, if as a taxpayer you are intending to register as a composition dealer, you are required to intimate the authorities, and you need to make that declaration by way of a form. So you have to file an application form, and which is mandatory. So it is not by default that if your turnover is less than 50 lakh, you'll be a composition dealer. In case if you want to be a composition dealer, you have to apply for it separately. Next condition is, once you are registered as a composition dealer, your input credit, you'll not be provided with input credit. So a similar concept we have today in value added tax, within input credit is not provided to a VAT dealer registered under composition scheme. So likewise, you will not be having your input credit, and any kind of taxes that you have paid at the time of buying goods or inputs, that will become cost of supply. Next, you cannot issue a tax invoice. So, if you are a composition dealer, you can only you can only provide bill of supply, and your buyer will not be able to claim any kind of tax that is included in input. So, in case if you are directly selling to end consumers, this may not worry. But if you have your buyers who are registered as a normal taxpayer under composition scheme, then they may not give orders to a composition dealer, because they are not eligible to claim any kind of input credit. So as a composition dealer, you have to make sure, you have to keep in mind with what are the parties that you are doing business with, and accordingly you have to strategize your business opportunities, because here you'll not be able to issue a tax invoice, and your buyer will not be able to claim any kind of input. And also, a composition dealer cannot collect composition tax separately. So we have seen that a composition dealer is required to collect taxes at nominal rates, let's say 2%, but this 2% he cannot collect from the consumer or from the buyer. So that has to be paid as a expense from their own pocket. So a composition dealer cannot collect composition tax separately. And we discussed previously that if you are carrying out interstate supplies, you are not eligible. You are eligible only when you are affecting intrastate supplies of goods and not services, only goods. And finally, service providers, interstate suppliers, e-commerce operator, very important. So also we discussed it previously as well, that e-commerce is one industry which GST is trying to address for the first time, because these businesses have been unregulated, or very minimalistic compliances are there. So here also, today we have dynamic businesses, and businesses, they are selling online through Flipkart's platform or Snapdeal's platform. These are online marketplace. So anyone who's dealing through these e-commerce operator, and the e-commerce operator itself, are not allowed to avail the benefit of composition scheme. Now, if we talk about compliance requirement for the compounding taxpayer, this we discussed in our previous session also. So they are required to file only two returns. One is GSTR 4, which is a quarterly return, that has to be filed by 18th of succeeding quarter, of the month succeeding the quarter. And next is GSTR 9A, which is merely an auto population of all GSTR 4 that has been filed. It is the annual return, which essentially consists all the records that you have already filed under all the quarterly GSTR 4. So this return has to be filed before 31st of next financial year. So if you are talking about financial year 2017 2018, GSTR 9 is required to be filed before 31st December 2018. So that's all the compliance requirement for the composition dealer. Last time when we discussed about normal taxpayer, we saw that they are required to file GSTR 1, GSTR 2, and GSTR 3, and all these returns are required to be filed on monthly basis. So that burden of compliance has been removed for the composition dealer, which is visible here. Now, coming over to the benefits under composition scheme, as a small taxpayer, or as a startup, we also understand that our audience also comprises uh, founders and co-founders who are at a very initial stage of their businesses. So some of the benefits of for such organizations, such startups and small and medium enterprises, they don't have to bear the load of compliance that we have seen in our previous slide. So there's very limited compliance, and that also falls into limited tax liability. Now, as a normal taxpayer, you're required to pay taxes at the rate 18%. Let's assume the standard rate being 18%. So if you're required to pay 18% tax, and your credit, you'll get your credit when your counterparty files his return. So there can be scenarios wherein your credit is blocked because your counterparty has not filed your return, which is not the case in composition scheme. So, as a normal taxpayer, you may face a liquidity crunch at times because your funds are blocked, because you've not got your credit. But that will not be a case with composition dealer, because there's no dependency on counterparty. Whatever you file, you have to pay taxes on that, and there's no concept of input tax credit. So that also ensures high liquidity because your funds are not blocked. So these are high level benefits in the composition scheme. But if you have followed composition scheme, if you have joined any forum, there are more cons under composition scheme that's being discussed. So one is limited territory of business. So today, you cannot limit your business. We have seen businesses are operating beyond boundaries. So if in case it is a limited territory, that's a drawback. And that also reduces the attractiveness of this scheme, because businesses, they don't want themselves to be bound within a particular state. So so in case if you are opting for a business model wherein you'll be supplying into multiple states, then this scheme is not available to you. No matter what your turnover is, your turnover may be 5, maybe 10 lakh, 15 lakh, 20 lakh. Irrespective of the fact, you have to register as a normal taxpayer. Again, there's a threshold limit of 20 lakh for registration. So let's assume that your turnover is 25 lakh and you are doing interstate supplies. In those cases, you'll be required to register as a normal taxpayer and have to file all the returns on monthly basis. So 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 one representation that has gone to GST council is to remove this particular provision, and we may or we may not get a notification on this. But as of now, only intra-state supplies are eligible under composition scheme. Next is this no credit of input tax. So again, that also inflates the cost of production or cost of input for a composition dealer, because under GST rate is going to be 18%. Let's assume standard rate being 18%. So if 18% of the purchase cost becomes part of cost, in the sense that there's no input tax available, then that also will impact the salability of a composition dealer, because such dealer will lose competitiveness from a normal taxpayer. And no collection of tax. So whatever tax liability has to be paid out of the pocket. So that's another drawback, because here, if you see, if you're buying from a registered taxable person, normal registered taxable person, you are paying taxes at the time of purchase, and at the time of sale you cannot collect taxes. So that adds additional burden on your funds. And finally, there are very heavy penal provisions under composition scheme. So the provisions are as such that if you were not eligible for composition scheme for any specific reason, and if the authorities has reason to believe that you should be registered as a normal taxpayer, you'll be penalized with penalty, which will be an amount equivalent to the tax liability. So first you need to pay your tax liability as a normal taxpayer, and then to the extent of such amount, you have to pay penalty. So these are very harsh provisions, because there's very limited clarification available as of now on composition scheme. And today, basis assumption, if you have opted for composition scheme and eventually you fall under normal scheme, then you may have to pay penalty on all the taxes, on the tax liability that you had. So also the presentation has gone from industries and from various bodies, wherein they are asking to reduce such penal provision to make it more flexible, And on that note, it has been provided that no penalty will be levied without show cause notice given to the assessee. But again, that does not resolve the harsh provision that are there in composition scheme. Okay, now coming over to the transitional provision, I'll just give everyone 2 minutes. Meanwhile, I'll also look into all the questions that we have received so far. So you can just go through the slide, and I'll just go through all the questions. Would try to address some of them now. I mean, do we have any question? Okay, so we have certain queries. We have one coming from Raj Agarwal. Um, can I get the link for last webinar? Returns under GST as I could not attend it. Sure, Raj. We have already hosted, so I suggest you go through our Facebook page, and there definitely you'll find the video link. What is the threshold limit? Well, threshold limit, Harshit, for the from registration perspective, it is 20 lakh in all the state. In certain hilly state and northeastern state, it is 10 lakh. And for the composition dealer, the threshold limit is set at rupees 50 lakh. I feel this is costly scheme because for the turnover 40 lakh we have to pay from our pocket. Correct, Raj. I mean the implications are as such. Why will anybody opt for it? Well, the as of now, see, I mean, India is a very large economy, and we have businesses, small businesses that are dealing within states, or maybe dealers who are directly selling to end consumers. They may opt for composition scheme. So the implications are still not clear, but as of now the scheme is available. But let's see. Well, the question is uh, who will be joining it. That has to be seen. So uh, yeah, we understand that tax has to be paid is very high. um, Guys, we appreciate as many queries as you can put, and so that we can have this session much more interactive. So please participate in question and answer, and and let's make it more interactive. We have some active participation in coming from Raj, Harshita, Harshit, Ajay. We see Ajay, Mr. Ajay joining us last time as well. So keep asking all these questions, and we'll just come back to our presentation. Now, talking about the transitional provision, so there are two scenarios. One wherein, as a business today, you are registered under composition scheme of VAT law, and under GST you are opting for normal scheme. We assume that the volume of such transition will be very high, because most of the composition dealer under current regime may opt for normal scheme. So so these transitional provisions are very important if you are the business who is registered as a composition dealer presently. So so once you move on to a normal scheme, you'll be provided input credit available on all the goods that you have, all, be it finished, semi finished, or work in progress. So you'll get the credit of taxes that you have paid at the time of purchase. But there are certain conditions to it. You and these conditions are, uh, first, such inputs that are lying with you must be with the intention of making taxable supplies under GST regime. So in case if you are the like if you have availed the credit, and if you are the planning to make it as a free sample supplies or non-taxable supplies, then such input credit will not be available. Um Also, the credit would be available only in case under the previous regime, such goods are eligible for self credit. So what that means is if certain goods are exempted today and there's no input tax credit available on them, maybe credit is available under GST regime, but you cannot carry forward such credit. So that is the condition. Um, Also, there can be a scenario wherein goods are eligible for input credit under current regime, but under GST regime, such goods are exempted or non-taxable. So you will not be able to carry forward your input tax credit for such goods if they are not taxable under GST regime. Also, you must have legal evidence that you have paid input tax at the time of purchase of such goods. So you must have all the taxable invoice for the whatever input credit that you want to claim. And GST Council has also set a limit of 1 year. So any invoice which is beyond 12 months from GST applicable date will not be allowed to carry forward the input credit. So all the input that you are showing and for which you are claiming credit must be procured within a period of 12 months from GST applicable date. So these are the transition provision for a composition dealer registered under current law and who's switching to a normal scheme under GST region. So next we have a scenario wherein presently you are registered under normal scheme and you are opting for a composition scheme under GST. So there can be scenarios. I'll give you certain example that your turnover is, let's say, 25 lakh, and you are directly selling to end consumer, or or maybe you are a job worker who are supplying to manufacturing unit within a state. So there can be multiple scenarios wherein businesses may opt to go for composition scheme from normal scheme. So if we have businesses wherein you are switching from a normal scheme to composition scheme, there are two conditions for such transition. First, as a taxpayer, you'll be liable to pay an amount equal to the credit of input tax in respect of input held in stock on the day immediately preceding the day of such switchover. So what that means is, let's assume that from 1st of July, GST goes live. So whatever credit that you have till the end of June, all such credit you are required to pay back to government, because you cannot carry forward any input credit under composition scheme. So so this credit will either be paid through debiting your electronic credit ledger. In case it does not have sufficient balance, then you have to pay such amount online through electronic cash register. And let's say that whatever stock you have, all input tax credit you have paid, any kind of credit which is still there, for example the goods that you are carrying forward, all such input credit will lapse, and you'll not be allowed to adjust this credit for any kind of tax liability under composition scheme. So these are the two conditions. Chances are very limited to have such scenarios, but we don't know. Businesses are dynamic and they may opt, it's a voluntary scheme, so we may have certain transition as well, and these would be the conditions for such transition. Do we have more queries coming in, because we planned for questions in this session? Okay, so I think we may have certain queries. We have one from VP, Mr. VP. Schedule 3 state registration limit 9 lakh, 4 lakh, but you mentioned 20 lakh. Well, I assume that you are referring to the old schedule. This limit has been long modified to 20 lakh and 10 lakh. In the sense, again, as we see that in services tax, the liability to register falls when your turnover exceeds 9 lakh, but you are required to pay taxes only when your turnover exceeds 10 lakh. So same concept applies here as well. You'll be liable to pay when your turnover exceeds 20 lakh or 10 lakh, but you'll be liable to register when your turnover exceeds 19 lakh and 9 lakh. So the limit of 9 lakh and 4 lakh has long been modified. So I think we have also provided clarification on all the guide page as well. Saloni, I assume that I'm audible clearly because we are not receiving any queries with respect to clarification in my voice. In case if you're talking with respect to any particular questions on any particular topic that you want me to explain in brief, you can again mention it here, and I'll just take a while. We since we are getting queries that many people are not able to join us, so we'll quickly show you what one of our guide page. Yes. So here I have come to the browser, and I hope you can see that in address bar I have provided cleartext.in/help/gst. So if I go on this page, we have provided a very extensive list of articles on goods and services tax. It covers composition scheme. So very recently we have published our FAQ on composition scheme. So we are doing webinars, but on a parallel note, we are also publishing all these guides. Uh, because there can be scenarios that you may miss joining our session, so you can anytime come to all these guides, and what are the returns applicable, accounts that are required to be maintained. So here you can come, and here as a normal taxpayer that all these records are required to be maintained. We are also trying to put infographic so that you can absorb it very easily. So we have also covered enrollment process. If you are into larger organization, and if you are working on enterprise resource planning, so what are the changes that would be required on ERP? So likewise, we have extensive list of guides and articles that you can anytime come over and access. Also, so at ClearText, we have simplified direct access. In this sense, anybody can come to our return filing platform and can file the return, and within 5 minutes. So it is as simple as that, and with the same enthusiasm, we are now developing a platform for GST for businesses and for chartered accountants, wherein they can come, they can they can they can smoothly transit their business from current system and current indirect taxes to GST, and they can have a high level and a detailed view of all the business transactions. They can file all their returns. So so in case if you want to keep yourself aware, keep yourself posted on all these developments, you can directly click come to cleartext.in/gst. And here we are also trying to provide many calculators and tools which will definitely guide you as a taxpayer or as a consultant. So we have library, we have there are certain services. We are also doing events, so you can anytime come over to this page. You can see all the events that are coming up. You can also participate in forums, and one thing that I would like to mention is get yourself register. So you can directly click here. You can provide your email address and phone, and we'll keep you posted with all the developments happening at ClearText with respect to goods and services tax. Whenever our tools or calculator goes live, whenever our next webinar is coming. So please sign up here and access all our guides, all our the articles that we are writing on goods and service tax, all our webinars. You can see a list of extensive list of calculators that will be shipping very soon. So 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 you can come over here and get yourself registered. So so again, that's the high level agenda for today that we had planned. We'll quickly look into any kind of queries that you may have. Okay, so we have a query coming from Shafakat. What will be the tax rate? Well, Shafakat, the tax rate has not been provided yet. The law says that this tax rate should not be less than 1%, and in case of manufacturing unit, it has to be it cannot be less than 2.5%. So that's what law says as of now. Actual date is yet to be notified, and we'll definitely keep you posted on that. We have another query coming from Lavina. Assuming that B has opted for composition scheme and purchased material from A, which is a registered dealer. In such case, B will not be able to take input credit. Now B sells to Z, which is the registered. In case, can Z claim? No. So Lavina, that is what we discussed. That since B cannot issue a tax invoice, and credit can only be claimed on the basis of tax invoice. So since B cannot issue a tax invoice to Mr. Z, Mr. Z cannot claim input credit on purchases made from B. So that is the harsh reality of composition scheme. And guys, in case if you have more queries, we are here. Please post your queries here. And in case you want to take some time, and if you want to draft your queries, you can definitely post all your queries to us, and we have been answering them on continuous basis. We have another question coming from Mr. Raj. Well, yes, it is the same concept from VAT has been taken under GST as well. So yeah, this is correct. Your understanding is correct. um, do we have more queries? So another piece of information that I would like to give you is for service providers. We have GSTN has opened the enrollment window. So if you're the service provider, if you are already registered under under services tax, then you can now complete your enrollment. And thank you so much for your participation and for your queries. And also, in case if you have queries, you can, well, C&F agents and other companies will definitely take industry specific sessions that so that these queries will get answered there. And what we were happening is we have a extensive discussion going on Facebook page and as well as on our Twitter channel. So keep your queries coming, be it on Facebook, on Twitter, wherever you find clear text, you can put your queries and we'll definitely answer all of them. You can also email to us, and you can let us know what all topics you want us to cover. You can also write your feedback and send it to us. We appreciate all the response that we are receiving, and we'll keep you posted with our next webinar that we are scheduling. Tomorrow we have a big day, uh, as in our budget is coming, and you can keep yourself posted with all the developments happening on budget through ClearTax channel. We will be doing extensive campaign with respect to all the developments in terms of direct taxes and indirect taxes. So we wish everyone all the best for their respective businesses. We hope that everyone has a very good budget from our finance minister. And thank you so much for joining us in this session. Thank you. I'm able to record something.
Yeah, yeah.